Hello everyone and welcome back to another video. During this video I'll be doing something a little different than what I usually do, and that is to go through exactly what goes through my head when looking at a chart and when placing a trade. So I'm currently on my funded account, which I started just for demonstrating videos such as this one, and it's a $25,000 account. So this is what you can get as a beginner if you don't have enough funds to be investing. So that is why, and the reason behind why I started a fund account, because I think it will be easier for you to relate to my videos. So what I have here is a gold US dollar chart, and you can see okay, so the first thing that I do when entering a chart and when opening a chart, I'll be looking, kind of zooming out and seeing how price has been moving recently. You can see that it was in an uptrend, started into consolidation area, moved very aggressively on the upside, and then caused a reversal to happen. So this is an indication for me to be looking for short positions as we're currently on a downtrend. And then I'll be zooming slightly in and seeing how price has been moving recently on this trend. And the first thing that comes up on my mind is this trend line right here. So at the point of the reversal up to this point, if I were to draw a line, you can see that it perfectly aligns with these two highs right here, which is a great indication that we have a trend line in our hands that is respected. So drawing that in and comes up to this point right here, then we have to draw some support and resistance zones. So I drew what was close to me and this trade specifically, and I sometimes use boxes for so zones instead of lines, but in this example I've wanted to keep it a little less crowded in my chart, so I used lines. And so I drew this line right here, which was used afterwards as my take profit, because you can see it formed kind of like a double bottom on this area right here and then pushed upwards. So this is where I'm expecting some reaction from buyers to be entering, so entering buy positions. And I've also drawn this area right here, which was during the consolidation period. There was a lot of reactions off of that area, so I've marked that in as well. And another one up top, which I didn't really use for this trade, but I still marked it because it was pretty close to my area right here. So these were my three zones that I've marked for this trade. And I always look left, see how price is moving, and mark up the areas. So we have a trend line, we have a couple of zones, we have then couple of indicators. And if you haven't seen the video that I've made on this strategy that I'm going to be using, I would suggest you greatly to look at that. Is the last video that I've posted, and I'll be linking that right now. It's what I've used in this scenario, which is using essentially the trend and retracements of that trend to be entering trends using the RSI to get some extra confirmation on those trades. And so we have a couple of moving averages and the RSI on the bottom right here. And you can see from the moving averages, the white is the long-term 200 moving average. The 50 is the short-term moving average. We're on the 1 hour chart right here. And we can see that due to the short term being below, we are looking for short positions. We are also, if you were to go on the daily, you can see that the short term gold 8 moving average is beneath the long term 21 moving average, which means again we are looking for short positions. And the fact that these moving averages are aligned means that we have an extra confluence to our side to be trading with the trend. So the next thing that I was waiting for is a retracement to the 200 moving averages. Is discussed in the video, so I won't be discussing it much on why that is. So this was an extra confluence for me to be entering the trade, as it instantly rejected off of this moving average and was caused to have this long wick right here. The RSI was at the 80 area at this point right here. So when the price reached this the top of the wick essentially, uh, we had an 80 overbought signal on the RSI, which I thought it was a great indicator that we might be seeing a reversal after I saw this long wick and a push down below the support and below the trend line. So the confluence for my trade was this trend line, the support, the moving average, all lining up perfectly for me to be entering this trade. And you can see that I've entered the moment that this candle closed. So the moment it closed, I entered my trade, and you can see straight afterwards there was a strong bearish momentum going downwards, and hopefully it will reach the take profit, which was set on the previous zone that I've marked up. And my stop loss was above the wick and above the moving average and above these uh, areas right here. I could have set it above this area as well, but I chose to keep it on the lower side. So this trade is 100 pips stop loss and about 250 take profit, which is a great risk to reward ratio. It's close to over to well close to 2.5 risk to reward ratio, and hopefully it will reach that region. So just to summarize what I'm usually doing when I'm looking at the chart, I'm looking at where price has been, marking areas, marking trend lines, looking at moving averages, and thinking of where I should be expecting to see a trade before it even reaches that point. So I was looking at this after this kind of strong rejection, and I was thinking, where should I be entering my trade? And after drawing up my zones and trend lines, I thought, okay, this will be my area that I'm going to be looking to get a trade. And that is what exactly happened. Obviously, it could have been anywhere between this zone. So close to this, I will be satisfied to be entering a trade. You can see that I didn't actually enter on this one, and I thought I've actually missed the trade, but I was patient enough to wait for price to retrace back to the 200. That is why I didn't enter on the previous engulfing candle that we had here. So enough of the technical analysis. Let's have a look at what else I'm looking at when placing the trade. And I usually go on to an economic calendar to have a look at what news are coming out that may be affecting the trade that I want to be taking. So I wanted to take the gold with the US dollar. So came onto an economic calendar, doesn't matter which one, and have a look at what news are coming out for the United States. And luckily there weren't any high impact news that were coming close to the the date that I placed my trade. There were some later on after some hours, so I would be cautious of that and try to uh, kind of put measurements on to prevent me from losing too much money. So when the time comes, I will be might be closing my trade sooner than my take profit or stop loss to kind of secure my account from not taking a huge hit if the news come out on the wrong side. You can see that there is a high impact news later on during this day. So that is let's say in 8 hours after I've placed my trade, and hopefully by then I will have enough gain to be able to close the trade with a good enough profit, and I will be happy taking a smaller profit regardless if it didn't hit my take profit, in order to keep my account safe from taking a huge loss from the news. And lastly, the other thing that I and lastly, the other thing that I want to be doing is go on to a lot size calculator. I'm sure most of you are using lot size calculators and calculate how much of a lot I want to be placing. So I will go into the instrument, change to whatever pair that I'm going to be trading, place my account balance and how much I'm willing to risk during the trade, and set my stop loss. And you can see it will give you the right amount of lot size that you need to be placing in order to risk that amount from your balance. So just to summarize of everything that I've discussed during this video, to get started, I'm going to the chart, look left and mark up areas and zones, see how price has been moving, and see if there's any good opportunities for me to be entering a trade. Then mark up my zones, trend lines, etc., to find a good area where I want to be entering, so an area of high confluence. And in this example, we had that with the trend line, the moving average, and the zone of which was a support zone, helping us out. And I swear this is not a cherry picked example. This is just what happens to, and I thought it would be a good example for me to place a trade. So I took this trade and wanted to demonstrate what went through my head after placing this trade or before placing the trade. And then after doing my technical analysis and be ready to place my trade, have a look at the news and calculate the lot size that I want to be placing, and just set my stop loss to the areas that I wanted and wait for to see how price is moving after I place my trade, to see if there are any adjustments that I want to be making. For example, I could have, for example, changed my stop loss to be slightly lower, to be around this area, considering that price has been moving to the downside. For now, I'll just keep it uh, to my current one, but I'll just micromanage the trade afterwards and react accordingly to how price is moving. And just before I close this video, this is the result of the trade. So I closed the trade slightly above my take profit due to news coming out, and I wanted to play it safe. So you can see that price is currently above where I closed the trade, which is good. So I've saved myself some money, and yeah, I didn't risk getting stopped out from the news. So this is a result of the trade, and sometimes you need to make some adjustments so you don't lose money. So thank you for watching this video. I hope you found this useful. If you did, make sure to like the video and subscribe on our channel. And thank you for watching. Have a good rest of your day, and goodbye.